I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA Review. Today is September 12th, Thursday, 2024. Hope you had a good day today. So, as I was mentioning yesterday, you have to watch the previous video so they make sense. Obviously, the 10 people that are watching, I'm sure you know that already. I should just stop even saying that. But just for new people, I'm mentioning that we're coming up here. We're coming up to wipe out that liquidity. This is the September idea of the 15-year historical data, right? So again, we don't follow it to the T exactly. Just because I drew this doesn't mean it's going to stop right there. Or, you get it, right? It doesn't mean it's going to stop right there. But the idea here is that we're coming up from the open, we're coming down, and then we come up to speaker, we're basically taking liquidity, we're wiping out liquidity on the top side. I don't know how far it will go, and if it doesn't take it, it'll come underneath it, and then it'll still make this pattern to come down. So gotta watch the previous videos, but I'm telling you, we're buying, and sure enough, we're buying. I mean, I'm literally telling you the day before, and most people are still trying to figure out where we're going. But that being the case here, so we open up and then we have a nice little gap down, and then again we're using that previous day closing area for a speaker. Again, when we get to a consolidation like this, so what are you learning here? I mean, if you take a look at like this whole price run right here, we're in the same boat. Like we're pretty much in the same boat. Like as well, let me see if I could make this a little smaller. See, you see this whole push down, this push down, then we push up, a couple drives, 3 drives, manipulation, then shoot down. Sure, that was fucking news, right? And then we push up, and then we consolidate. We speaker out right here. See how we speaker out right there? Can you see that? Let me zoom in. You see that? See how we stop right there, and then we speaker out right there. Then we push up, we retrace, and then we got this nice trendy day, right? Which this is I'm expecting for Friday. I'm expecting this Friday type of thing, but very similar price action, man. I mean, right here we push down, and then we have this. We got these drives up. We get the news that slams it down, and then we get the little trend up, right? So that being the case here, you see the speaker here. When I'm coming to the chart, like first of all, we already moved so much yesterday, right? So and then you look at Asia, and London, and whoever was trading this, I feel bad for you because I know you were frustrated as shit, right? Today's a day that you don't want to trade the AM session. Like you really don't. Is there moves? Absolutely, but this is not something that you want to be married to. I mean, you can see both sides of the market. You can see the bottom side. You can see the top side, right? A lot of imbalance on the bottom side. But what did we do? We slightly came down to an hour imbalance right here. Very, very simple price action. First imbalance right there. This is a nice refinery on the 1 hour because if you go to the 4 hour, it's a little too much. And then if you look at a daily, it's too much, right? Like that big ass candle. Yes, we did break that high right there where we switched. We busted through that. So again, a lot of objectives down here that you could have went a little bit lower and dangled this carrot, right? But the 1 hour was best. If you refined it too much to the 15-minute, then you would have missed it, right? You would have, well, not missed it, but you would have got stopped out, but it still would have been okay if you understood what was going on here. Okay, so that being the case, let me go back to the 1 hour. So when 9:30 is here, right? So 9:30 here, we had the 8:30 news today that also created liquidity. So it made a lower high here. If you look on the 15-minute, let me open this up because this is kind of important. Yeah, there you go. That looks much better. So you see we have this high right there and then lower high. And then look at this, lower high. That's a data high. You know we coming up for that shit. So what do? They come and they push down the price. Nothing big. Again, these weak ass news candles are not what they used to be. But price comes down for a couple drives. So what do? We, as you see the point of origin here, look at the highs. And then when you're looking at if you're looking to complete the speaker, you're looking for a dip down. Once 9:30 comes in, you're looking for a price to come down and get into a 15-minute imbalance, 1 hour in this case, and wipe out that liquidity here, which is also built from Asia. I'm not going to draw the line, but you can see the phantom trend line right there with that low, and that low. You see that? See that? So that being the case, right? What do? They're dirty today, super dirty today. 9:30 comes in, they push down first. Now we get into that first 15-minute imbalance. And if you took this buy, I wouldn't have been mad at you. But take a look here. You can see this last down candle, which is this 931. This is holding. You do have an imbalance right here, and you do have the opening of the day gap, right? So their goal was to come on this side and make the speaker and take liquidity. And then in this case, they were playing around. Look how the opening range gap is very small. It's not big at all. So that's also not a good sign. And then also the price, we're bouncing from that gap right there. We come back. Again, we're tagging this level with that imbalance right here, which is now a bearish inversion, the 930. But you also have this 933. So we're kind of staying in that, the price action. Look at these little higher lows with the wicks. This is a suspect move to get, induce you into buying. And then what do? They rush the price down. So now the macro kicks in at 950. What does it do? Literally pushes down. We raid the low, right? So there's a raid here. Now we have a real purpose to move up, and this is definitely the best move of the day, if not there. But so what do we do here? We're respecting the 50%, not in the way you would like it, but you can see that when we come down, we push back up, we engulf that candle, and then we're pretty much having a divergence here. Nice. Look at that low right there, and then look at that low. Beautiful. Fucking SPY was beautiful right here. But we push up here, we retrace back into this imbalance here, which is the 952, right? Man, I wish they would stop doing that. If somebody, please, if you guys know how to stop making this shit highlight, please just make a comment for me in the video, please. I've been struggling with this for years. I'm sure it's fucking something stupid. And if they don't, I need to send a message to TradingView because, my goodness. Anyways, is there a way to lock this shit or something? Even if I lock it, it don't matter. You can still. Oh, is that how you do it? If you click it, you're good. Oh, I think that's how you do it. So I gotta lock everything? Wow. Well, that's what I'm gonna have to do from now. I'm gonna have to lock everything. Okay. All right. We'll see how that works. Anyway, so this imbalance is 952 candle coupled with the 949. Take a look at that. See how we push up and we break this little swing. It's not a swing, but it is a shift, but it's not really a good shift. So I'm not even gonna mention it. But the point is, this 948 is what I'm talking about, this up candle. But really what matters is the intersection of what you want with this inversion imbalance plus this balance price range. We want it to dip in, and it didn't dip low, and they were so dirty that they this low didn't take out that low, and I was like, oh, you guys are fucking dirty. And another dangling carrot for today, that thinking that the price is going to come back down. So they were super fucking dirty on that. These guys got to be getting smarter. They know everybody is teaching this shit. This is the new understanding, and it's like, bro, I feel like they are adjusting shit, man. Because, anyways, I won't get into that. But the key thing here is that the overlapping of this 949 inversion imbalance plus this 952, you want the top half of it, right? So you want the top half of the regular imbalance at 952, and then you want the top half of the 949. So what does that leave you with? That leaves you, let's just say, let me just do it this way. Let me just say it does this. All right, so that's the top half, right, for example. Right, and then the top half of this would be very similar, right? So, and I'm doing this to show you that when they intersect is the best place for a trade. And obviously that would be tapping this inversion imbalance. So that's why they tap it twice right there. I mean, I was looking at it like, are you guys going to come deeper at all? And they did not. But and that's the best formula of the trade right there. So anyways, that being the case, with these two down candles, look at these two down candles, this the 949 and the 952. Those two down candles are the last two down candles technically. So we're using that as a demand block. We're tagging in beautiful area to buy. Where do you take this buy from? Well, you know that you've already got into here and you've completed the speaker on this side, right? Now it's time to come back up because we're bullish. The whole point is buying, and you're coming up to take out this high. I mean, as at the least, right? So what does it do? It does that, right? So tag in here and then boom, we push up. Look at these 3 candles with the gaps just rushing to get up to this area. People who are selling right here, right? Nice liquidity run. You got to watch these lower highs on purpose. Well, obviously coupled with the highs over here. Let me zoom out. I know you can't see it. Look at this. So besides that high and that high, you have the data high. You have that. Look how the data high came right underneath that high. I mean, right. If that doesn't tell you that we're coming to take that, bro, it's like free money. It's like letting you know. And then that high and that high, right? So it's like way too perfect, right? So you're holding for that high. You're holding for this high because yes, you could take it out here, but I mean, I would just hold for here. I mean, there's no sense of not, right? Like we're already, what do you think? I mean, you know, it's relative, but you hold for that high. So anyways, so what do? While we're pushing up here, we also have that gap in the background. Remember, we have that gap. I've had these gaps on forever. So let me zoom in. And while we're moving up and down, where's that gap from? I think it's from Sunday the 9th. Yeah, over here. Sunday the 9th. All right, Sunday the 9th of June. If you're wondering, but you should have this on your chart. So, but anyways, the point is that we're also bouncing on that, right? So these are the levels. You have the day opening gap. You have the opening range. You have that 1 hour imbalance, and then you have that gap I'm just mentioning. So that being the case, we push up here. We see this imbalance right here, this 830. This is going to be used later in the day as well because it's way too obvious and people are gauging of up and down. And then what do? We break out from the 930 open right there. We break out and look how dirty the price was today. They slam it down, right? They don't touch the open, but barely by a point. And they leave this little gap right here. So what do? They bounce it up, they push up. Watch this imbalance right here, this 10-12. This also gets used later perfectly, and we're referencing that. Even though we break it, they can. This doesn't mean it's over with. Doesn't mean it's not going to be used later, right? So that's the difference between supply and demand and on all these retail concepts, but algorithmically, they're still referencing this imbalance, right? So we tag here, we push up, we wipe out, we get to the last candle, look to the open. Look at the open of that last candle perfectly. I didn't even realize that. Then we push down right here, and when we wipe out that liquidity, we get back into the opening range, but now we purposely have tagged that last candle. I mean, look at this. Look at the detail here. You have to be able to pay attention to this. I'm going to zoom in real big. You see this right here? I knew they were fucking coming up for this. Look, so first of all, that doesn't have a wick. That doesn't have a wick. And this just gapped. So there's no wick that came back down to mitigate that empty void of price action. So literally, that's a magnet. So when the price came down here, look where it came to. Look at the open of this candle. Look up here. What's the open of this candle? Open is 19,255 and 3/4. Look at the low of this candle. The low of this candle is 19,255 and a half. So you're talking a tick below. So that's how it registered it, right? So me personally, I would have a limit order right there. Like on the open plus a tick, a higher tick even, because they won't even get you in. Many times I'll put my limit order right there and I won't get filled, and I'll be like, what the fuck, right? And that's just because they're bullshit. They're on some bullshit. So you keep that an extra tick above just to be safe. It's only a tick, doesn't matter. So you rather have it than not have it. So anyways, so that was super obvious, right? Took that liquidity and then they raided up, right? So I mean, there's so much to discuss here. Super fucking violent. Look at these down candles. I mean, dude, they do not want you coming up with them, right? They do not want you getting up there. So super. So another speaker here, right? So 3 drives down. When they get down here, we get down here, and man, there's so much I can mention in here too, but I can't. I gotta make these videos shorter. I'm already at 15 minutes. My new thing is I'm really just trying to focus on the teaching. Fuck all the extra shit. Fuck me. I'm not trying to explain too much. I want to just teach on this and keep them at 15 minutes, at 10 minutes, but I don't see how. So just bear with me. So anyways, that being the case, because this is too long to edit, longer videos, then I have to upload it takes longer, and then I'm just like, I'm missing my gym time. I'm like, I'm doing this for free, so it's like my whole goal is not to ruin my swag, right? So anyways, so right here we come down right here and we hit that gap again. That gap's in the background, by the way. Whoops. That gap, the opening day gap right there. So we're referencing that again right here. We come and we tag it. Now it's past 11:30, so write this for your notes too. Past 11:30. Once past 11, when 11:30 kicks in, the lunch starts from 11:30 to 1:30. So it's a 2-hour lunch technically, right? So what the algorithm will do is it'll hunt liquidity after 10 any low that was created after 10 p.m. 10 a.m. right? So 11:30 will kick in. Like, where's 11:30 now? Let's like 11:30 is right here, right? So what it'll do is it'll eventually start moseying its way down and take out the first low or the last low, the most recent low that's behind price of 11:30 and wipe it out. And that's what it did right here. Comes down and wipes out that liquidity. So this was also obvious too, and if you understood that, but just super dirty. What did it do? Came back to the opening range, tagged the opening day gap, and then the body sitting here right there at the 50%. Not really pretty or anything, but just that's the idea. Comes back, and then you see a little strength here, but nothing too obvious. But then comes right back to that 50%, and this is why that 50% is super very key in anything you do here. So what do? Dirty. They come right back to 50% of this wick, bro. I mean, look at the man. I mean, so you gotta understand these things. These little details are what matters the most. Let me just spread that out a little bit. And it does not hit it. That's to show you strength to the top side. So if you got a limit order sitting here, you're burn up. That's why if you have a quad and you put this at 25%, you could put your quad here, right? You could put your entry here, and then you could put your stop loss here. Because if it's going to be lower than this 25% lower part, then there's no, I wouldn't even want to be in that trade, to be honest. So, all right, I'm just telling you what I do, right? Put an entry level here because you'll miss it. And if you're like, oh no, I want to get it, well, you're going to miss trades. I mean, that's just the way it is. But then you would put your stop loss here. That's how I do it. So, anyways, let me get out of that just a tidbit. And then what happened here? Okay, so then, but what's the goal here? Now it's 11:50. So the 11:50 macro is kicking in, and now lunch is going to reverse and try to look for all this liquidity. So sure enough, that's what it does. We come down 11:58. And we're in the macro here. And what time is it here? Yeah, 11:46. Not yet. So look at all these little lower highs. Look at all these wicks poking up, right? Poking down and then coming back up. All closing. Every single one of these candles are closing way above their wicks, right? For example, too much wicks on the downside. And this is to show you this is that it's leading up, right? Then we come back up here. We got this nice imbalance right here. This 1202 right there. We dig into that. So this is now a shift above this high. So now this is the order flow you're actually waiting for. If you're waiting, if you didn't get in here, then this is your next level here. Price pops up above that high. Now you have a shift in structure. Retrace back into that imbalance. It seals it perfectly. Not perfectly, but just, it seals it. So that's a sign of going up. And then you're also sitting in the middle of that imbalance that we've talked about right here. That I told you about this 10-12. We're sort of like still floating around that area, and look how we come eventually to 50% perfectly right there with this 1240. See that? So so this is entry 1, entry 2, but this is technically entry 1, entry 2, and then take off. Where are you going? You know you're going above here, right? So sure enough, that's what it does. Takes off, little imbalance right there. I'm not going to draw this all out, man. And then look how dirty that is. I mean, they come up here, they finally get like these nice little 3 drives, sort of speak, and then bam! Look at the candle. Look at what time is this? This is 251. So then that macro kicks in of the 250, and then boom! Look at they hunt the liquidity back down. Where does the price go? Conveniently right to that little candle right there. See that little candle right there? This 255. 1255. See how we tagged that down candle right here? Can't make that up. It's the only down candle over here, right? You see that? It's the only down candle here, and then boom, we come and tag that. And why? Because right here, like you didn't know it could have sold from here, right? But then you get this energetic candle, this 1257. See how it's so energetic and it pushes up hard? I mean, anybody could have closed their eyes and pushed buy after this, right? So is it a coincidence that they come all the way back and tag that underneath that candle? So I mean, that's to show you why would buyers and sellers fucking do that? Like, come on, man. It's like serious. It's like so obvious. But anyways, and where we're going? Obviously, you know we're going up here. So this is the goal. So and what is it? 343. So what was I gonna say? I was gonna say something, man. Damn. Let me go to here. As you see, we had where am I here? Here's 830, right? 830, we had a nice divergence with S&P taking out the highs, and we had lower highs here with Nas. I'm sorry. Why is this here? This is supposed to be over here. I don't know why I did that. This is supposed to be here. So here you got the lower high here, and then you get the higher highs right here, right? Right? I'm not tripping, right? Yeah. So then that pushed us down, right? We came down here. We had a nice lower low here with Dow. See here? With Dow right there. And then we had higher lows right here. Higher lows right here. See that? So, and they were all in agreement here. But here, between this 950 and 1005, not coincidence that it's in that macro, right? Then we push up, right? We push up, dirty price action, and then we get this lower low with Nas, and we get these higher lows with Dow and S&P, and that pushed us all the way up. So if you were watching that, this is why I'm telling you about this buy right here as a confirmation, right? And then right here had lower highs here with Dow, and then we had ran that liquidity on both Nas and S&P. So nice push down, but I mean, you know, if you're even trading this late. But other than that, let's see. As far as projections goes, let me see. I didn't do one. Let me see if I can do one. I'd rather do it on a 5-minute though. So here you could probably do it. Yeah. See how this looks like right here. This is a nice projection right here. You can also do it. Just give me a second here. All right. So this looks pretty deep to me. That means obviously we have a lot more room to go, but just blew right through all of this, and that was not helpful at all, actually. And then if you do it from here, because since this is the push down, I don't know about that. I don't like that too much. Well, to the 1 standard deviation, it does reach it to the tick right there. Look at that. Look at that high right there. Same level. And then when you get to the 1 to 1.5, which is now above that, in here, you do get a big retracement. And sure enough, I mean that is a retracement. But in general speaking, that's really just coming. Can you see it? Can't you see that with your eyes right there? See if I squinch it up? You see how there's like literally like it's just a straight line right there. There's no price action. There's no nothing. It's just a break kind of thing. Very obvious. But I think I'm beating a dead horse here. So dollar obviously playing around a little bit too. Starting to come down a little bit. So that would make sense if we're going up, right? I was mentioning that yesterday, so watch yesterday's video. And then this liquidity here, the Dow decided to come take it out. So that if we're bullish, that would make sense. Even though Dow is, sometimes a contrarian of the market, which it'll generally come down if we're going up. If you look at, let me see here. Look at that. And here, this imbalance is just holding price, and then think tagging that little gap. Look at that. Doesn't your eye go to that by watching my videos here? By now, you should be able to, your eye should be able to run to shit like that, right? And then S&P, nice push up again. So they're sealing that price here. It's gonna be very interesting from here, to be honest. But I still think they're coming up. I mean, look at that. I mean, they're like literally the same level. That's crazy. Yeah, we're running for that. I mean, there's no way we're not running for that. But so yeah, I mean, there's nothing really to tell you that tomorrow's news is gonna definitely. I expect a floater tomorrow. So pushing up to the top side, and then yeah, I was telling you about this, and we had another day of bullish with Nvidia. So what am I missing here? I don't think I'm missing something. I feel like I've mentioned everything I need to. Right? I hope this all made sense, and you see all this price action. What's the point of all this? The point of all this is to literally train your brain. 26 minutes, dude. It's I don't know, man. So you guys take care. God bless.